Hi, everyone. How's everyone doing today? Hope everyone had a good day with the Fed. Powell gave the market everything it wanted, and it definitely took advantage of it. One thing I'm looking at here in the euro is we retraced 78.6 here. So this is kind of a do or die area for the euro. You look at it on the 4-hour. Here's your 78.6 retrace, giving it a shot here. Initially, maybe we get a pullback to 114 to correct this recent advance, 1450. So trying this in front of the NFP tomorrow. S&P's got to that 2690 area that I've been talking about. In fact, we talked about it with Blake yesterday when he was showing the Aussie yen, the risk on pairs, looking like they had some upside, and I was talking 2690. We're there. So we've had a dramatic move from Christmas Eve, and perhaps we get some type of pullback in here. But it's starting to look like that was the bottom. So I'm looking for at least some type of 50% correction, maybe back to 25.5, 25.20 in the days and weeks ahead. Gold is shining again today. We have new highs in the metals. You can see it accelerated through this channel line here. There's no divergence on the 4-hour, and trying to blow it out here. One of my trading buddies was looking at maybe 1330. Excuse me, 1330. That must have been Freudian. That's where a lot of the bulls are talking about 1400 gold or better. Think that there could be some type of correction from 1330 or so. So waiting for some confirmation, some divergence to go ahead and do it. And yields dropped substantially, which, also took US dollar yen lower, which means yen higher. So here we are. We really got hit yesterday on Powell. You look at this was Powell. And now that I look at where we are now, I think yields might be bottoming here, and I think we could rally back to 290. That might support the dollar and take the euro lower. So the euro's made hay while rates have softened up a bit here. And looking at the pound, actually didn't have as great of a response as the euro did yesterday. Up a little bit here today, but this is your second lower high. Here was the first one. Here's the second one. And I think that we could get a pullback here in the pound. That's been a nice move from, call it 25 to 32. So I know there was a breakout right around here. I believe it was 130, 131. But the dollar, as weak as it was yesterday, is holding the 78.6 level here. Still did not take out the low of the move before we had this big rally. So right around the 78.6 level, pretty low risk trade to buy the dollar and give it a little tolerance under 95. So we'll see what happens. Maybe the catalyst for a dollar rebound could be in the employment report tomorrow. And while I have everyone here, and I believe I did welcome all our viewers from investing.com, why don't you consider risking $1 and get a feel for what we do here. I believe I'm with the strongest team I've ever been with, and I've been around in this industry for decades. One of the best teams I've ever been a part of, probably the best. In fact, not probably, it is, with Blake and Grega, Stell and Steve and Coach and Joe and Paulie and Amanda. Amanda's in the trading room every day. She's starting to tweet some of her good trades, and there was a great trade that she had here. Just want to show it. There it is. So you could watch Amanda trade and co-tailor 400 pips already. She put this out a few days ago. Here's her chart. Okay, it was in pound Kiwi, and she saw a little 3 driver here. So our members chat is really a great place to immerse yourself in, because there's 100 traders in there. Amanda moderates it. Joe's in there. Blake spends a lot of his time in there. After Face is really just the tip of the iceberg. And, you know, because the markets keep going after the stock market opens. So we're done with interviews and everything after the market opens, right? So that's not the true color. That's the way it looks. And then you get your dashboard with all the technicals in here for many different instruments. And above that, you get Elliott Wave, you get harmonics from Andre. Greg provides Elliott Wave work. Basic technical is Blake and Steve, and the candlesticks as well. As you can see on my chart, we push alerts, so you could be anywhere. You don't have to be at your workstation. You could be on the go. And if anything important is happening in the market, you're going to get a push alert to make you aware of what's happening here. If we have new updates, if we have a pattern in play, if you get support and resistance breached. And then something else that is very significant is where you trade. And our sponsors, Forest Park FX, have structured a reimbursement program, and they're a broker. So you can get either a rebate check, or if you're outside of the US, it can be set up so that your trading pays for your subscription here. As you can see, they have many different brokers to select from, and they could be a good guide, because you want to be careful about where you deposit your funds, because it's not only, you know, shooting for returns on your equity, it's sleeping at night knowing that you're in a segregated account and that your funds are safe, and that one day you wake up and you find out that a chop shop, a boiler room FX firm isn't there anymore. So with that being said, a day in front of the NFP and after the Fed, I'm going to toss it over to Blake Morrow. And Blake, how are you today? How's it going?
I'm doing well. Good morning, Coach.
Good morning, buddy.
How's it going?
Okay, pretty good. So Paul was definitely gave the market what it wanted yesterday. I'm curious what you're thinking in here with what happened to the dollar, what happened with stock indexes and the metals all exploding on that one candle there.
Yeah, I mean, it was a big move. I was you know, I'm a little bummed out because I was trading some cross rates along with the dollar. I was short the dollar. I was long euros going into the event. I had some, and you know, I sold it for pretty decent gain. Like I made like 50 pips up here, and then but then I took some losses on some cross rates. So it's like it was more of a frustrating day for me. But yesterday, and I didn't get long more because I'm a little concerned. We're up here at the 78% retracement. I wouldn't want to be long dollars. Let me start by saying that I wouldn't want to be long dollars on, you know, generally speaking, because we are at end of month. So end of month, all the reports that I've read show some dollar selling going into month end. So you know, I actually had a bid in the euro overnight at 114.50, you know, to try to get long, and that didn't get hit. So I'm just kind of like, all right, well, what do I do now? I'm not really too sure, but I would still be buying dips in the euro as long as it doesn't, you know, if we can stay above 114.40, 114.50. I think being long the euro is the place to be, or being short the dollar. Remember, this is a false breakdown of the channel, retest of a major trend line. retest of a major trend line. And so, you know, I think eventually we make it to 115.50, 116. You know, the 200-day moving average is going to intersect with the recent highs at 115.70. So that's ultimately where I think you should target if you're short dollars. But the chart, and I made this the blog chart of the day, is where the dollar is at the 200-day moving average, and we're at this, you know, year-long trend line. All right, so you can see we're holding right now, which it's problematic if, and I should set up an alarm here, if the dollar index breaks through this 95.10 level, that's going to be a pretty bearish event for the dollar. And that's the dollar index as a whole. So I think you got to be a little careful. But I'm not, although I was bearish the dollar going into yesterday, right now I'm kind of indifferent because I want to see how the month end treats the market. And then also, look, China trade negotiators and U.S. trade negotiators are meeting right now. You know, they're discussing, you know, these, you know, the tariff hiatus that we're in, and you know, they're trying to put a deal together between now and the end of March. And so a trade deal is not going to get done today per se. And so if stocks, you know, which are sitting at major resistance here, I mean, you know, this is really key, Coach, and I know you watch the S&P pretty closely. We're up against the underside of this major broken trend line. We're at the 618 retracement. We've got a downtrend line, and you know, the S&P could be vulnerable. If the S&P does reverse from here, what does that do to the dollar? Does the dollar firm? And that's why I'm not super bearish the dollar at this very moment. You know, the dollar had a great move yesterday, but I think that you have to be a little careful with dollar shorts at this moment. You know, if a deal with China is not getting done right now, all right, could that mean that the Aussie and the Kiwi, you got the Aussie dollar, which is up almost at the 200-day moving average. We got it coming in just around 73 cents. So you can see we're like 25 cents away from that, a quarter basis point away from that. We're right up against the 200-day moving average. It's been a hell of a squeeze. The Kiwi's also been squeezing higher and probably getting a little overbought, especially on an intraday basis. If those turn, you know, and you know, we could see some dollar strength come through. One of the other currencies that we got to watch really carefully today is the Canadian. We do have Canadian GDP coming out momentarily, actually in about 15 minutes. Canada is expected to print a negative GDP, I think, for the quarter. No, this is month over month GDP. So we're expected to print a monthly GDP, a negative GDP print. And matter of fact, let me see if I've got, let's see, give me 1 second. Month over month and then year over year, and then we have raw materials price index and industrial product price. So just some inflation data for Canada, but everybody's going to be watching the Canadian monthly GDP numbers, which are going to be pretty important. And if that prints too far in the negative, the dollar Canadian could really spike up back up through here. So you got to be, like I said, you got to be a little cautious with dollar shorts down here. We've gone pretty far.
Nice pattern in play took advantage of that, and
and
also a nice pattern in play on the upside of Aussie by Grega. So you know, caught the downside in Canada from Steve, and caught the upside from Grega. Nice trading.
Yeah, they've all capitalized on a lot of these. Greg on the New Zealand dollar and on the Aussie dollar, and Steve on the Canadian. So they've done really well. But you know, again, you got to be a little careful here. I don't think that that continued dollar weakness is a slam dunk trade at this moment. So that's why I think that that as you know, as we navigate through, you know, all these headlines and, you know, some potential risk off, we have to be just a little bit more careful at this point with what we're doing. And you know, I'm watching. I'm going to watch the S&P very carefully here because we just made a new trend high, but we're knocking our head up against a lot of resistance. So, you know,
some divergence there, Blake.
Yeah, a little bit of divergence. You know, we hit a new high. RSI is divergent. That's a 4-hour. The daily still, you know, is not overbought. So we're just kind of hovering in there. But, you know, I like I said, I think we've got to be a little careful. I would hate to be too aggressively short the dollar right now, you know, buying euros, buying Aussie, buying Kiwi, shorting the dollar Canadian, and then the stock market go, you know, see a nice, you know, down leg, and then the dollar might, you know, catch a bid. And knowing where the dollar is at, knowing that the dollar index is right here at the 200-day moving average. Now, also a couple other things that I need to talk about is let's talk about the dollar yen. The dollar yen broke 109 yesterday, and that has prohibited the pairs like the euro yen from breaking out above 125, and we did a little false break yesterday. If you use ForexAnalytix yesterday on the euro yen, yesterday says false breakout in the euro yen intraday. That doesn't bode well for risk or longs here, and that was when we were below. Let's go over the 4-hour. We closed below the 125 and a quarter, and you know, you can see the euro yen now. It's you know, after doing that false breakout, it's sold off a little bit. So you got to be a little, like I said, you got to be a little careful, extra careful with risk here, because if risk appetite rolls over and you see the stock market roll over, you know, you got the Aussie yen that's above 79 now, and the euro yen that's really struggling. So, you know, could be a little problematic, like I said. And let's take a really quick look. This is the S&P, and I'm going to be frank with you guys. I've been following the S&P very closely. I haven't followed as closely the rest of the indices. So let's take a real quick look at the NASDAQ and the Dow. So here's the Dow, and let's go out to a daily chart here with the Dow and see the Dow. Again, that it's been a while since I've looked at these charts. So, but I think it's worth noting, since we're, you know, dealing with an S&P that's, you know, up against resistance. Well, here's the Dow right up against the 200-day moving average, and also, let's delete this. And we got the Dow right up against a, you know, downtrend line as well. So let's grab our fibs here. You know, right around the 618. So also really key resistance. Now Facebook has done a little, or Facebook has helped the NASDAQ do a little bit better. And so here's the NASDAQ edge that didn't give us much downside. So false breakdown here. You can see that. False break below these lows, which created a nice little squeeze. Okay, so now let's get rid of some of this stuff. We don't need it. I don't know what all that is, and I don't need this at the moment. Okay, so we're you know, above the 50% retracement. We're making new trend highs here. Okay, so making new trend highs, and you know, RSI is probably a little divergent. Yeah, it is. It's divergent, especially intraday. But you know, NASDAQ I don't think is as clear as the S&P and the Dow right now. So again, you have this you know, lift in all of these risk assets like the S&P, the Dow, but right into key resistance. The Nasdaq's outperforming, obviously. And then if you look at the DAX, let's go look at the DAX really quick. This has got to be a little concerning if you're long like the German DAX. We came out of this. Channel, and I looked at this breakout right here as being pretty bullish. Oops, let me. It's right here. Yet the DAX has really failed to capitalize on that move. And you know, if the S&Ps turn lower from here, I would be a little concerned about being long the DAX. Now, knowing that in the DAX we have a big head and shoulder pattern that still has a while to complete. I mean, we got to make our way below 10,000 in order for it to complete. And you know, maybe this is just a pause in the longer term downtrend of the DAX. So that's something that I think that that we have to watch really carefully here. So let's see. One of the other pairs that we should probably take a real quick look at. I know we have this Canadian GDP that's coming out here in just a second. So, and we did look at it, but let's just make sure that the dollar Canadian stays below 131.75, 131.80. Now, Steve is probably here now. Steve, are you here?
Yes, mate, I am. Good morning.
Hey, good morning. So with sorry, I'm writing down something really quick. With the dollar Canadian, you still have a short in the dollar Canadian. How do you feel about the dollar Canadian right now going into GDP numbers?
I feel fine. I booked 1/3 of my position yesterday when we were approaching the 61.8% fib for obvious reasons, you know, to book some. I've moved my stop loss to break even for the rest. So, you know, I'll let it, you know, do what it wants to do. I mean, I have no risk on the table anymore. So, but on the other hand, I don't want to cut my possibility of further profits because from a technical perspective, I'm looking for a continuation of the move lower towards 130. This is 130 is the place that I'm looking to actually, you know, take it off.
Yeah, so you know, because we're at the 618 retracement, and we got a bear flag, obviously, but because we're at the 618, do you feel that that's a pretty important pivot for
in the short term? Definitely. That's why we also saw that reaction. I mean, from a technical perspective, it's perfect. But do I think that, you know, this is the end of the move lower? You know, just looking at the previous move to the downside and, you know, looking at the bear flag, which actually has an implied target just below 129, and also taking into account the confluence of supports you have there, that blue ascending channel and the 78.6, I think that, you know, we should sooner or later make it to that area.
Okay. Well, you know, hopefully, you know, risk appetite stays strong, because one of the key components of this is if we see a turn lower in stocks, which, you know, you can see the S&P is on the verge. I mean, if we start to see some risk off, that could put a bid in the dollar Canadian, at least temporarily. But I'm going to pass it over to you guys, and I want to thank you everybody for being here today. And Steve, the charts are yours. So everybody have a great trading day today, and good luck with the Canadian GDP.
Thank you, mate. Let me.
Good morning from me as well.
Good morning, Celio. Let me remind people that, you know, we're going to be 10th, 11th, and 12th of the month. We're going to be in New York in the New York Traders Expo. 11th of the month is Forex Day there. So, you know, we have a presentation. We're also going to have a booth for, you know, all the days. So any of you, you know, that is close to the area, or, you know, that you want to combine it with something else in New York, the registration for the Traders Expo is completely free. If you just, you know, if you Google Traders Expo New York, you'll find it there, and, you know, you can find us there, and we're going to have a get together, you know, in the same evening. So, you know, here's the USD CAD. So yeah, we do have Canadian data. Stelio, what is the market expecting for the GDP today?
Where it's a month-on-month reading for Canadian GDP, which is different than others. They're expecting a minus 0.1 actually from 0.3 previous reading. And we have raw materials prices as well, which is expected to rebound from a very negative number last month. So, yeah, so Canadian GDP is flirting around zero, really. That's what it's doing.
Okay. What else do we have from a macro standpoint? Because we have a few minutes until the GDP. And by the way, Greg is going to be with us a few minutes after that. So, you know, we're going to be able to have his perspective from, you know, an Elliott wave approach. So, Stelio, anything else that we had overnight?
We have, well, first of all, data-wise, we also have, I think we have core PCE out of the US. It should be published, but, you know, with the recent shutdown, some of the numbers are not being published. So I think we have it, and it's expected to be just below 2%, 1.9% year on year. So if you remember, it actually touched 2% a few months ago, and then it just it dropped slightly. So that's. I
mostly wanted actually to take your viewpoint in the implosion of German retail sales. I don't know if you noticed that. I mean, it was an astonishing print, right?
It is a volatile number, though. But yes, you're absolutely right. It came in at minus 4.3%, expected minus 0.5%. So it's and this is not the first German number that we've seen that's gone badly. So it seems, you know, it seems that the you know, Germany is no longer the locomotive of the EU. You know, after the global financial crisis, is really the country that drove the EU forward, but they seem to be having some trouble. The other thing I want to talk about just very briefly is the FOMC yesterday. So they kept rates unchanged, and it's actually quite interesting to see how in a space of 2 months the Fed and Jerome Powell have gone from an indication that the hiking will continue at a kind of a steady pace and quantitative tightening on autopilot, basically just on a set course, and now it's completely changed. They've been pretty clear about it. The tightening is done, and also they mentioned that they're ready to adjust the rate of which they're unwinding the balance sheet, and you know which way they're going to adjust it. It's only one way.
If you remember, we were saying that since before all that happened. If you remember, I was mocking even the idea that the market was pricing in just a few months ago, like at some point, like 3 hikes for the year ahead. And, you know, I was saying that this is a joke. There's absolutely no chance that this is going to be happening. Within a month, we've had the complete 180 and capitulation from the Fed. And in my opinion, this is the beginning of the end, because now the SARAID, the facet that, you know, the Fed had a plan in place, that it was a short-term plan, that it's not debt monetization, et cetera, et cetera. Sooner or later, the market is going to realize that all that is dead, that it cannot count anymore. If the Fed actually managed to raise rates to less than 2.5%, and it managed to unwind the balance sheet from 4.4 trillion to 4 trillion, and, you know, and the next step is going to be probably inflating it again, then, you know, the whole idea that there is a plan to rewind these kind of policies and, you know, take them back to neutral, and then so we can have like dry powder to do it once again if we have another financial crisis, that all goes down the drain. And the market then realizes that it's a one-way street, right? Yeah. The balance sheet will never be unwinded. It's only going to be inflating from that point on, that interest rates cannot go back to normal simply because the debt, the private and national debt cannot really afford high rates. Okay, let's see now. We're a few seconds away from getting Canadian data, so let's.
And the US data as well. Let's have a look. Okay, any second now.
Let's switch to USD yen here on the bottom right.
Canadian minus 0.1 as expected. RMPI marginally weaker than expected. I think Canadian data is in line, and
Canadian data in line indeed.
We have some
to December and
core PCC, I don't see the numbers, so maybe it's not going to get released today. Employment cost index in the US slightly
initial jobless claims 253 versus 215, so that's a weaker number.
Yeah. Yes. Continuing jobless claims also a little bit higher.
That's so roughly 20% higher, roughly than expected, the initial jobless claims. So as you see, the combination of these data seems, in the short term at least, the initial reaction is weakening of the USD CAD. So let's see if we can actually make it through this 61.8 intraday. Anyhow, we'll monitor the data again. Big miss, as we said, on claims. Canadian data more or less as expected. The other pair I was talking about yesterday, I'll stay with the 4-hour charts for now. And I mentioned specifically that it's very well positioned in case we had USD weakness. I said that it was the Aussie USD simply because this was a nice expanding triangle, a textbook corrective pattern. And we did break above it. And now the next upside area of interest is at 73.50. I do think we are on our way there. And if you look at the Kiwi, the situation is not different there. We had one more move higher. We had a pennant. We had the continuation higher. And now we're approaching the previous high at 69.70. Once again, in my opinion, it's very easy to go above that. My target was, since we were consolidating here, 70.50, 70.5 cents. I think, we're on our way to make it there. So, another triangle there. I haven't marked it on the 4-hour chart, but it's very easy to recognize. Here it is, another triangle here. There we go. So, plenty of continuation. This one was also a corrective formation. This one as well, as you see. Since we bottomed out with this little spike here, the Kiwi has been producing upside moves, little corrections, upside moves, and so on and so forth. Once again, in overbought territory in the 4-hour chart, which is a very healthy thing to see from a move higher. The other one I wanted to show, and I was saying, and actually yesterday I posted an update when we were testing this rectangle support. We're still on the 4-hour charts. Here's the USD yen. USD yen, I was initially monitoring this ascending channel. We broke it, but continued to oscillate within a rectangle. And then we broke the rectangle. The rectangle's implied target is roughly where you see here this horizontal support, which, we're almost there. I mean, it's another like 15, 20 pips to make it there. And if we do make it below that level, I think we can easily see another move lower towards these lows, if not lower at 106. So I think that, USD yen, I kept saying that the path of least resistance, in my opinion, remains to the downside. And I do think that so far this has been vindicated. Now, having to do with the S&P triangle, that's why I took advantage of those two dips lower. I said it on the webinar as well. I offloaded my short position. I only kept half of it because I saw that it's more than clear that we might have another push to the upside. So I wanted to be able to average in again, because I do think that sooner rather than later we're going to have a move to the downside. Even if that proves to be corrective, I do think that we can easily make it down at least towards 2600. We did get a breakout from this triangle. We did get an incrementally new high. We did make it to 2690, 2695 almost, which is previous support resistance area, quite a strong one. So it's not improbable to roll over from here. Personally, I would prefer to see some better extension of the triangle's range. So if we take this triangle and we measure the extensions. Now, for example, we hit at the same time, this was also the 127% extension of the triangle. But, we have a nice confluence of resistances up there, the 78.6 of the last move lower and the 161.8% extension of the triangle. So, we might make it to that area, 27.11, 27.15, before actually seeing some type of a deeper correction. Some RSI divergence also on the 4-hour chart. I think it's more than clear. So, that's going to be a nice area to see some type of a pullback. Now, obviously, yesterday we had. Let me go back to the USD pairs first, and then we can talk about crosses. Having to do with the Euro USD, it also benefited quite a nice day yesterday, but in my opinion, it remains one of the worst places to be, because in essence, Euro USD hasn't been doing much. I mean, it's been producing moves higher and lower, but in essence, we haven't been progressing one way or another. I'm just monitoring this channel. So, nice confluence of resistance is a little bit higher towards 115.80. You see here the 200 daily moving average, this channel's resistance, the 61.8 of this move lower. So I would be a little bit careful if we make it up towards 1570, somewhere there. I think, you should take it easy, because there is absolutely no guarantee that we're going to make it through that level. We've spent a lot of time oscillating in some type of range one way or another, and I have no indication that that's about to change anytime soon. Another pair, USD NOK, that benefited yesterday from USD weakness, and as you see, it's now flirting. Actually, this has played out perfectly as we expected when we were back there. We pushed higher, lower, we pushed higher towards resistance again. We got rejected there, and now we're attempting to break through this. If I go down to the 4-hour chart, you can see that this is a very nice looking head and shoulders formation. Blake was on top of it. You can see it here, right? There it is. Shoulder, head, shoulder, breaking through the neckline as we speak. This has an implied target at 8.
Stelios sold the top.
Yeah, he actually did. He actually
for
did.
our macro calls, pay attention to our macro calls if you don't like to be in front of the screen all the time. Stelios comes up with, he called the top in euro pound. So you don't get a ton of trades, but his hit rate is excellent.
Yeah, but
in my extremely accurate and humble opinion.
But on average, since we are a lot of us, you do get more or less a ton of trades. We've been up since July 2016, and we've so far issued. Let me see how many.
1 million.
612 trades, patterns in play. That's not bad, right?
So what's that average?
Oh, we've surpassed now.
About one a day or more? Well, no.
It's a little bit less than that, actually. Yeah. Yeah. But the stats.
There's not a trade every day.
Yeah, but still, I mean, it's
pretty active.
And we're not afraid to, when we have a position, when we have, a viewpoint in the market, we're not afraid of event news. I mean, yesterday, just before the event, those are the positions we had. Look at this. We had 1, 2, 3, 4 dollar positions, despite of expecting the news, because we felt that the technicals were showing us that we're going to have more USD weakness. So we were trading on USD weakness, right? I mean, that's what we felt like doing. I mean, we're not afraid of event risk. If something looks good, it looks good. Like now. I mean, Blake asked me what I intend to do with USD CAD. I intend to keep it, right? It still looks good to me. So why not? Going back to crude, which of course is behind, a big part of the moves we've been seeing in the USD NOK, in the USD CAD, etc. So having a look at crude, as you see, crude on the daily is now testing the neckline of an inverted head and shoulders formation. If we go to the 4-hour chart, you can see if we view this as a triangle, where we've already broken above the triangle, and we're now testing this high. So, I said yesterday that if that gets confirmed, I'm then looking for an extension towards the 127% extension, which is almost at $58. So I think there is still more upside here, which tells me that there is likely more downside for the USD NOK and the USD CAD, right? It's as simple as that. Now, you said it yourself, Coach. The metals keep performing very nicely. I now have no real upside target for gold because that was my last upside target for gold. I feel that this is now a very mature move, so I would be quite careful here. Same deal, exactly same deal with silver. Silver actually is now entering the final zone I was looking for, this 1615, 1620 resistance zone. So I have to say that I definitely wouldn't be trying to buy them up here. I mean, your last opportunity, in my opinion, was buying them on the breakout from these consolidations that they had. Both of them were triangles, as you see. So that was the last good opportunity to buy the breakout, in essence. I would be definitely more careful from this point on, quite overbought, as you see also. So, I think, this is the place to keep it easy. Hi, guys. In Kiwi, we have a triangle, which means we are in the last move higher. Short term, what would be your estimate for fifth wave up? Something, I can answer that question, but I'm not going to do so because Greg is going to be with us any minute now. So I'm going to just forward that question to Greg so he can directly show you his short-term count. Okay, just be patient for a few minutes. He's going to be here with us. Bank Nifty and Nifty for the coming week. Okay, let's have a look at them. Here is the Nifty. Here it is. I would be a little bit careful here because, as you see, this move higher definitely is lacking momentum. So I expect that there is a good chance that we're going to fail from here. So my viewpoint hasn't changed with that. Bank Nifty, and here is Bank Nifty. Broke down from this ascending wedge. So I would also be careful here as long as we are below this wedges high, especially if we come down there, then we also complete forming a head and shoulders formation. So I would still be rather careful with Nifty and Bank Nifty. Some nice reaction to the upside, but we're coming up to some nice areas of resistance. Now, NASDAQ has broken above this resistance. The Dow is also attempting to do so. S&P testing this area of resistance. So I have to say that risk in general has been obviously benefiting lately, but I would be quite careful here. This move to the upside needs to see some kind of a correction, because so far we haven't had any real correction to the downside. I don't care what the catalyst is going to be, but I think this is not the area to be buying again. If we do see a move lower and it has corrective characteristics, then we can talk about it again. But I don't think that this is the place to be doing so at the moment. How can I earn from Forex? Buying lower and selling higher, or selling higher and buying lower, as with anything else. I mean, it's a very generalized question. I can only give you a very generalized answer. Let me see where Greg is. Okay, so let's have a look at the crosses now, because we definitely have some interesting moves in the crosses as well. So let's start with the Euro-Aussie. Euro-Aussie looks quite vulnerable here. As you see, we had a false break higher, and then we had that huge candle to the downside. And this latest move to the upside looks like a flag to me. So I would be very, very careful here, because you can easily see continuation lower. So this is the Euro-Aussie. Now, this is the Euro-Kiwi. I have to say that the Euro-Kiwi looks more constructive than the Euro-Aussie, but this might be deceiving. Definitely, though, it looks somewhat better than the Euro-Aussie. Regardless, we seem to be breaking below this horizontal support area, so that would anyhow reopen the door for a test of the lows. And pound crosses, pound Aussie, pound Kiwi. Be careful here. You can see pound Oz is at a very critical area of support. A break below this one will point lower because in essence is going to make this rebound look corrective in nature. And pound Kiwi, an ABC kind of move, found resistance at previous horizontal support resistance area. Barely managed to close above the 200 daily moving average, so the 200 DMA in essence rejected us. And after yesterday's move, also invalidated the inverted head and shoulders formation because simply we simply passed again below the neckline, right? And actually, we had this conversation yesterday in the chat room, in which I found the opportunity to say what I've said before. I've explained multiple times that you should be careful with head and shoulders formations and inverted head and shoulders formation. What I'm saying now doesn't apply only for inverted or the regular ones, because very often what looks like a head and shoulders or an inverted head and shoulders formation is simply masquerading a triangle. And I drew that and showed them yesterday in the chat room as an example of what I mean. You get something like that, and everybody goes enthusiastic. Look at this great inverted head and shoulders formation unfolding, and then you have a continuation to the downside, and you are like, oh, that was a triangle, right? That's why it's quite important to also notice the characteristics of a move. So, for example, this could have been an inverted head and shoulders formation, and you should respect the such as long as, for example, at worst case scenario, you come down, you retest the neckline, and then you get some kind of a move to the upside, because afterwards you should be able to say that, okay, what if this is a pennant, right? There it is. Do you agree, Grega?
With a bearish view?
That with the general view that very often head and shoulders and inverted head and shoulders formation mask triangles or pennants or continuation formations, and very often people will jump the gun thinking that it's a reversal pattern, but then it proves that it was just a continuation pattern.
Yes, agree. So I mean, if we go below your right shoulder, that would be quite strong contrarian evidence.
Exactly.
It's actually done. Yes.
Exactly. By the way, I already have a question for you, an Elliott wave question that popped up before you actually made it here. We have a friend here that asked, in the Kiwi, we have a triangle, which means we are in the last move higher short term. What should be your estimate for fifth wave up? That was his question for the Kiwi.
Okay. Okay, so actually, I'm tracking different options here. Okay, now the basics would suggest that actually this red wave 4 degree triangle that I'm tracking could be actually higher degree blue wave 4. Okay, and the reason why I'm not going with discount is because I see much more upside here for wave 3.
So you think we're currently in an extended lag?
Yeah, so wave 3 is typically an extended lag, which means it can be much longer than wave 1. So rather than calling that we are already in wave 5 here of this black wave 3 higher degree, I should be aware, or at least leave the option on the table, that we are still in the middle of wave 3, black wave 3. Okay, but the idea is that no matter how I'm looking at, I think that correction can be around the corner, because we are out of a triangle, and this is quite extended move from a triangle here. So rather than expecting a pullback back to this area of a fourth wave right there, I think that supports can be found a little bit earlier, maybe already at this former wave 3 swing high. So the idea is that correction will be coming, and that this will be just a temporary setback with an uptrend either after black wave 4 or after blue wave 4. Okay, so I'm expecting more upside for sure here, because here on the left, sorry, we can see that actually projections are still 200 pips away for this market.
Nice. Speaking of the Kiwi, we also had a nice breakout higher. I had warned about that in yesterday's webinar as well. In the Aussie was actually, from a basic technical analysis perspective, in a nice expanding triangle. You can see it there between A and B. You can draw that as an expanding triangle. So, you know, it's a usual, yeah, exactly. It's a usual continuation formation. So I was saying yesterday that if we have USD weakness, and we have indeed the Fed as expected to capitulate, and you know, on the side of the balance sheet reduction as well, we should have the Aussie benefiting from both the risk-on sentiment and the USD weakness. So I expected this breakout might manifest, and I do think there is more upside here towards 73.50, 74, and from what I see there in your count, you're also looking for something like that, Gregor, right?
Yes, because we are just in the middle of this wave C, so we need 5 waves up. There's room for much more upside for sure. Also, it's good to check this count on a higher time frame, where we should pay attention to these previous 4th wave corrections. Okay, so I think that this zone here around 74 can actually be coming into the cards right now. Okay, and I clearly will remain bullish here as long we are here. I have a short-term count. As long we are, let's say, above 71.90 level, around there, I remain bullish. But if for any reason we suddenly drop back into this black wave 1 area, then obviously this wave B would still be seen as an unfolding pattern, but more complex.
Okay. Okay. By the way, we have a friend here asking, how can I ask questions after the webinar? The answer is, if you are a ForexAnalytix subscriber, or if you become a ForexAnalytix subscriber, you can test ForexAnalytix for just $1. There is a 10-day trial for just $1. We have the chat room. We're active there all day long, or you know, some of us, I mean, on rotation. We're there all day long, and you can ask as many questions as you want. It's not only us; there are other traders as well, very capable traders. You know, we have a very nice community. I have also questions for you, Gregor. Hi, could you ask Gregor about CAD yen and Aussie yen?
Okay, CAD yen. I mean, all of those yen crosses. I've been talking about this already a few weeks back, for me are definitely not interested at all, because we have seen a very sharp move to the downside, and we have seen a very sharp recovery. And normally after 2 of these phases, we will see, rather than another sharp move, I just think that we will rather go sideways, because statistically speaking, I mean, it's the same thing with Bitcoin. We have, in 2017, we have seen a sharp move up. In 2018, we have seen a sharp move down. And now I think in Bitcoin, we will go sideways. So I think that Japanese yen is actually going to be trapped in consolidation. But I would be warning for potential wave B pullback here, especially if we consider the stocks can also be playing around the resistance. So regarding CAD yen, I think that we are in this wave C, which may drive prices higher, but as I said, after a pullback. Okay, so I'm expecting wave B pullback, then another push to the upside. Keep in mind that we are, let me just add also dollar yen here. Okay, that dollar yen has actually filled this gap from January 2nd. Okay, we've seen a drop, and now we filled this gap, and now we are back turning either to the downside or at least sideways. So I really think that this yen crosses could really give you some hard times here, trying to figure out the direction, because technically speaking, of course, dollar yen could go much lower. but then on the other hand, you have stocks who are turning to the upside, and dollar yen actually did not follow stocks very well. So it's a little bit tricky pair to trade, to be honest.
Yeah, because for example, yesterday dollar yen followed the yields, which you know isn't that weird. You know what I mean? So yesterday it followed the move in the yields.
But when you're trying to consider what the stock market is doing, then you have a little bit of conflict. I mean, if you would expect S&P 500 to be at the levels that is right now, if you would be thinking for looking for that levels a few weeks back, you would expect dollar yen to be much higher as well.
Speaking of which, you indirectly mentioned when you were talking about the yen crosses, you mentioned that you know stocks are at resistance at the moment. So what is your viewpoint there? Where do you expect some type of a pullback from?
Here is the S&P 500. Just a second to change the contract. Okay, so on the S&P 500, I see 5 waves up. I adjusted the wave count after this recent push higher. Yes, so I think the triangle and the resistance is not far away. So be aware of a 3-wave setback. Also, if we take a look here at Dow Jones, also waves 1, 2, 3, 4, 5.
3, 4, 5, yeah.
Yes, and also Nasdaq, I think it's very similar. Waves 1, 2, 3, 4, and we are now in 5th wave. So
yeah, same structures.
Yeah, so I think that can be around the corner. Also, if we take a look at DAX. Okay, here's the 4-hour. Also waves 1, 2, 3, 4. Maybe that was a wedge for wave 5 to complete wave 1, and we are now turning down for a pullback. And also, if we look at crude oil, same thing. This is wave 1, 2, extended wave 3, wave 4, and now we are at wave 5. Now, as you know, I've been looking for this pattern earlier. Earlier this week, I thought that wave A is already in place and we are in wave B, but since wave B did not retrace even 38.2%, okay, which was around 50, I think that actually we are still unfolding wave A, because wave B, honestly, it's just too small to fit this structure.
Yeah.
I think that still correction, higher degree correction is coming, but firstly, maybe 56 can be seen before we are turning back to the downside. We also have some kind of a divergence here, nothing significant yet, but if we are starting to roll over from a new high, then I really think, especially in impulsive fashion, then I really think that we should be aware of deeper price action here for AP. And this goes very nicely in line with stocks, of course.
Anything else that caught your attention after yesterday's move? I mean, something that...
I can take a look at euro dollar. I mean, as you know, we've been talking about the euro dollar.
Yeah, it's horrific.
Really don't like the price action at all. I mean, we are, just a second, we are here, moving sideways since summer of 2018. So there's really nothing significant going on. I know that this can actually be still a bearish triangle, like here shown on the left, that we go to the downside if 78.6 holds. But on the other hand, if cable is going to see more upside, that I see it in a wave 4, if dollar Swiss is now, Swiss franc is finally headed over for a correction, then euro dollar is really should not have issues to pass this 1.16 level. Also, another thing I want to pay attention on is 10-year or German bonds, actually. So here I have this chart.
Oh, you think we are in an ending diagonal in the moons?
Yes, I think that we are here in a 5th wave, and at least short-term resistance can be found here. So keep in mind that also we are making the same land here, like we have seen up from February 2018 lows to May highs of that year. So we can be seeing some kind of at least short-term 3-wave setback. So I look back, always notice that when bonds were declining here, okay, let me check here. Okay. Actually, when bonds were declining, the stocks, the euro dollar moved to the upside. Okay, so here was the same thing happening. This was in May 2018. We have seen bonds turning to the downside, euro dollar rise. Okay, also here we have seen a reversal to the downside, euro dollar rise. So even here, if we take a look closely, okay, we have seen a move to the downside on bonds, euro dollar rise. So I think that, and I would not be surprised if we would see something similar right now here. Okay, if the bonds maybe were starting to turn over, maybe we will get some upside here on the euro dollar.
Speaking of the bonds, we had quite a nice continuation to the upside in the treasuries following the Fed yesterday.
Yes,
right?
Yes. But I think that maybe this will be just a temporary move, and that actually these stocks and US yields will come back together real soon. So I don't trust these moves, actually, to be honest.
Yeah, I do see, though, technically speaking, some space for a move for the yields, for the 10-year yields, the US 10-year yields, even towards perhaps 2.5, roughly. So I wouldn't find it impossible to see an incrementally new low in the yields before having them resume to the upside.
Yes, I mean, this environment between stocks and yields could really tell us a lot what will be going on. Maybe yields will come, after all, a little bit lower, as you said, especially if maybe stocks will also turn down for a correction, and this could also catch the positive correlation.
Yeah, indeed. Coach, do we have an interview today?
We have Shy Girl with us.
Oh, perfect. So
Nice.
She's going to talk about energy, I guess, right?
I think Grega likes her too. He did a like on Twitter. He rarely does it. So Tracy,
so you're big brother now, right,
yeah.
Coach? You're monitoring our likes.
I am George Orwell's nephew, and I'm watching everything everyone does.
Okay.
Careful
The
out
all-seeing.
there. I know where your stops are. And I'm hunting them. So thank you, Grega.
Thank you, Grega.
Always great to see your work, man. You know, you're the Wizard of Waves, my favorite Elliotician. Steve, great review. And without further ado, hello, Tracy. Welcome back to Face. I'm making you the presenter right now. And really look forward to having a conversation with you. So you could share your screen. Let me see if you're unmuted. I know you're calling in.
Hi, guys.
Hi, it's been a while. How are you?
Good.
You know what? I look forward to it. You're the headliner of the week, Tracy. So great to have you back with us. I love your Twitter feed, and I really think that you have a great handle on the energy complex. You know, you're able to share your screen if you want to do that to show charts, etc.
I'm actually on my phone. I can
you traveling?
Call back. I can try switching to my computer if you would like.
Well, you know, it's always better to be able to see what you're talking about. So why don't we do that? Otherwise, right. Okay. So, stand by, everybody.
I'll be right back.
Girl's gonna be back with us so that we could see her charts and what she's doing here. In the meantime, you have a little bit of euro weakness setting in. So far, a failing rally.
In the meantime, I'm here, Coach.
Yeah. Okay. Yeah. Go ahead. So is Grega still here? Because people were wondering what he was thinking of gold.
Yeah, actually, that's true. Grega, if you're still here, I see that you're here, but I don't know if he's on his computer. Oh, yeah, there he is. So you want to show us the metals until she's back? Let me pass it again.
Sure.
There you go. I passed you the screen again.
Okay.
So what do you think? Is this a terminal leg higher that we are looking at in gold and silver, because I definitely I started the webinar by saying that the metals have now completed my upside targets, both silver and gold. So I really would be extremely careful being long up here. And from what I see on the left-hand side on your 4-hour chart in gold, more or less, you're looking for weakness from here as well, huh?
Yes, I see prices in a fifth wave. I'm not really sure how this how this next phase will play out, but I definitely would expect a 3-wave setback, at least back to 300, 1300. So I think that from trading perspective, price is too high for me. Definitely need some pullbacks, and still I would be watching this development when we approach this upper side of this big range. So I have prepared also a new wave count here on the right, as you can see, and even this one, which shows a triangle in the middle.
Oh yeah, we got an E wave. Yeah. Okay. Yeah.
Wave is still missing. Okay.
I talked to someone else that brought that up too, Greg, a potential E wave. So interesting to me.
Yeah, so both different wave counts actually suggest that there can be limited upside coming. So I'm not sure.
Although you can't really, you mean in the very short term, because if we have the second scenario that you have on the right-hand side, then we have some decent upside following after that, right?
Yes,
exactly. If we assume that the triangle is a B wave.
Yeah, so that to answer this question, we would need to see structure and personality of a wave
of the pullback. Yes, yes.
If it will be slow, it will
I predict a very shiny personality for gold, Greg. You know, a sunny disposition. Put your sunglasses on. When the sun hits a gold bar, it could blind you. So I'm glad we were able to squeeze that in. Tracy is back. So we have to look at the nature of the pullback, and that'll give you some longer-term clues. But you think we're pretty close up here.
Yes, I definitely would watch out for potential, some at least short-term sell-off on the upper side of this extended move.
Buying up here doesn't make sense, so there's no question about it.
Yes.
All right, so Tracy's back, and we're going to be able to see your charts this time. I'm going to make you the presenter again, Trace.
All right, can you hear me?
There she is, yeah. Perfect.
Yeah, thank you. All right, Tracy, you could tell you're a trader because you're persistent. You know, a lot of people give up. You know, what do you say and think when you see tweets about people who say, I can teach you the secret of trading for a certain amount of money? What do you think the secret to trading is? That there is no secret?
That there is no secret. The secret is there is no secret.
Yeah, I agree with you. So why don't you tell our audience how long you've been at it?
So, well, I started back in 2005 as a broker, and kind of moved my way up the ladder, so to speak. I started as a broker, I worked on the trade floor, and then now just as an independent trader.
Okay, so you want to show us your setup and what you're looking at? We've had a great recovery in the crude market from the depths of desperation with everything. There's a screen share option on top.
All right, let me just move this chart. How's that?
That does it. Okay, beautiful, Tracy. What nice adjustment. So, you know, we're looking at, okay, so a lot of people are thinking we'd have maybe some type of head and shoulders formation. I know you also follow the fundamentals in energy. I know you trade based on technicals. So what are your thoughts about what's happening in Venezuela? And is that a factor into the strength here that we're having in, say, the last week or so, pushing it up to new recovery highs?
I mean, I definitely think that that has a little bit to do with it. I mean, that's kind of a loaded question because we have so many opposing forces fundamentally right now going on in the crude market.
Okay.
You have Venezuela's sanctions, OPEC cuts, and Canada cuts on one hand, and then on the other hand, we have this global growth slowing, We have some demand flowing, and things of that nature. So it's kind of a push-pull on the crude oil market. But as far as Venezuela is concerned, I think that, ultimately it will by, default kind of push the WTI market up, but I think it will affect the Brent market more because Venezuela crude is more of a sour crude. So I think that, a really good way to kind of play that may be the WTI Brent spread.
Okay, where you're long Brent, short WTI?
Right.
Okay.
Just as, because I think what happens is I'm kind of mixing fundamentals and technicals all together. But I mean,
that's what we do.
As far as Venezuela is concerned, I mean, what we're going to see is kind of a change in global trading routes, right? So Canada just had a 350,000 cut, and they just scaled that back by 75,000 barrels because, we can potentially use Canadian crude to swap out for Venezuelan crude, as well as we can get some of the more sour grades, also increase some of the imports from Middle Eastern countries. So I think for WTI, it's not as big of a factor as it would be, say, for the Brent market, because you're pulling that out of sort of the Brent market.
Okay, so you're an energy trader. Does that include things like nat gas and what's happening in Chicago and the Midwest? Okay, mainly just crude. So
mainly just crude. I don't trade nat gas. No.
It's pretty wild, isn't it? So you look at this technically, it looks like you have some levels here that we're at. What are those levels based upon that you have? One here and then one at 57.88, and then looks like $60 a buck.
Basically, but it's not on this chart. I kind of just drew this chart up for this webinar. But a lot of these are volume levels, right, and consolidation zones. So this could be, where we have, if you have the volume profile up here, where.
Okay, so you use that. I think I remember you use that like market profiles as a something technical that shows all these areas where volume came in. Is that what you're talking about?
I use TPO and volume profile, so market profile and volume profile, which are two separate things. I personally like TPO better, but I use volume profile as well.
Okay, so go ahead.
If you just want me to go over this chart really fast.
Yeah. Are we breaking out here, Trace? Say someone came to you right now and said, Tracy, I'm flat crude. I have a bullish bias. What do you do here with it pushing at new highs? Do you wait for a setback, or do you just put a piece on and then if it pulls back, add on to it?
No, I mean, I personally, what we have going on here, go over a little bit of the background of this chart a little bit first. Is, right here was kind of the OPEC meeting, right? And they decided to cut because they wanted to stabilize the oil market. So we did, kind of, stabilize it a little bit. We had this consolidation zone here until the end of December came and whoosh, right?
Yeah.
And then we saw at the beginning of January, we sort of came back up into the consolidation zone and kind of been trading in here for a while, which, to be expected. We kind of got two opposing, forces going on here. First, you could look at this and call this a head and shoulders. I personally do not like that chart pattern. I think it's unreliable. It's just a personal thing because I've seen too many times that it doesn't work out. But if you like that chart pattern, then yes, it's obviously present here. But then we have this. If you look at just this piece, over here we have this, interim, we have this ascending broadening wedge, which is a bearish chart pattern. So, I would kind of like to see what it does up in this area, which is, maybe around 55, 60 area. If you wanted to long this, just technically speaking, if you wanted to long this, I would wait until a full candle closed out above this, right? Broke out. We have a full candle close, have a pullback, and then take the long from there.
Okay, it sounds to me like you're waiting or stalking potential shorts up against the upper wedge line. Am I reading you correctly?
Yeah, I think that we have, two potentials here. Either, two scenarios that could happen. You could have, this pattern come to fruition, which would mean we could get a bigger pullback down to that 48 area is where this price pattern would target. And then possibly see another move up into, seasonality. We could have long seasonality coming up, so you could have a pullback down to this 48 area, and then move up again. That's kind of looking far out for me because there's so many mitigating factors in the market. There's a lot of correlation to ES right now. So if
I was just going to ask you about that, Trey. So, have you ever seen the crude oil and the S&Ps marry up and become Siamese twins like it was from October through the end of the year before?
Not like that, no.
Yeah, me either. Right. So now do you take into consideration risk on when you're trading crude, and if the S&Ps were to correct?
Yeah.
Okay.
Yeah, if we're looking at if we start having a major pullback in indices, then, I think the crude oil market by default may be pulled back, unless something, happens in the Middle East or something like that that would, totally mitigate that scenario.
Do you think that there's a possibility for it? The president is arguing with the intelligence community that Iran doesn't really pose a threat, but Bolton and his some of his cabinet members are very hawkish towards Iran. Do you see anything happening there?
I think that ultimately the Pentagon is sort of in charge of that, but it's definitely something to keep an eye on. It makes me a little uneasy to have such warlike hawkish view going on right now.
And do you think that it's not just political in Venezuela for us, and of course China and Russia lining up on the other side, that it's really like everything is about oil? Right.
It's about oil. The problem is that, the U.S. is a little bit too late trying to get in there. China and Russia have already sort of established themselves within Venezuela. So I think, U.S. is kind of late to the game in that respect, but, we'll see how events sort of unfold.
Yeah, they were in there with Chavez, right? When
back then. And then
the Chinese have bought everything, even countries. Right.
Oh, absolutely. Look at Africa. Look at a lot of places.
Do you follow the Chinese currency to give you any clues on what's happening in oil? I know people do it for precious metals. Does a yuan play into anything? And do you think that the exchange that they opened to trade oil, has that been gaining any traction? That's kind of their game plan to de-dollarize the world.
Right. I don't know if I don't really agree exactly with that narrative, and I think if you look at their current contract that they're trading, all the trading is within the front month, which means that, really it's just a spec contract and you don't have really any major players in there. So, if they really want to have to make this contract, a different, make a difference to this contract and really sort of, change some of the flows from, WTI or Brent,
they need hedgers to come in.
Yeah, they need to attract some real players, and foreign entities are kind of skeptical to get into the Chinese markets because they have capital controls. So I think they have a hurdle there.
Okay, and what do you think about U.S. production? It still continues to be very strong. I don't think that anything that they capped a year or so ago are more wells coming online. U.S. becoming, do you believe that we're energy independent in the U.S.?
No, energy independent is sort of a misnomer. I mean, we have global oil flows. So, we will, U.S. now is a major exporter, yes, but we will always import oil. So kind of saying we're energy independent is, again, a misnomer. I mean, most of the refineries within the United States are, tooled for heavier grades and whatnot. You can't just survive off of WTI. So,
okay.
So that's my feeling on that. But, U.S. is becoming a powerhouse in the industry. But again, crude quality matters. The world can't survive on solely WTI.
Yeah, I wouldn't want to drink, and I wouldn't want to drink the sour crude, though. Let me ask you this. Maybe a whiskey sour, but let me ask you this: currency, does that fit into your equation? A weak dollar, a strong dollar?
A weak dollar, strong dollar. I mean, it does, but in the longer term sense. So, not so much, an intraday move, but obviously, if over the long run we start to see a major, move up in the dollar, say, you're going to see pressure put on all commodities, but not so much in, say, a day-to-day sense. It would have more in a macro sense.
Okay, and interest rates, they play a role in, for example, all the debt that's been taken on by shale producers and oil companies. Could that also be a macro thing to keep in mind when you're talking about the price of oil?
Well, yes, I mean, definitely you want to keep those things in mind because, say the price of oil, does get too low, then these companies are have a major debt load. So that's something to keep an eye on too. You don't want the price of oil to get too low because then we have a 2016 all over again.
Okay. Do you keep an eye on or trade around oil shares? Do they give you any kind of indication of what might be happening in energy? I know that sometimes the shares actually lead oil and can outperform, or they could lead on the downside and underperform. Is that also something that you keep an eye on?
Oh, I definitely watch the equity market, energy equity market as a whole.
Okay. Does it give you any tells?
It does, but again, not so much for intraday trading.
Okay. So are you mainly scalping nowadays, Trace, or are you swing trading stuff or position trading here?
More swing trading. I'm not really scalping this.
Okay. And you have a lot of followers. Do you have any kind of business model? Are you involved with anyone where people could follow you and learn, and besides Twitter, keep up with what your thoughts are in the energy complex?
Just really Twitter at this point.
Okay. Are you caught in the middle of the cold polar vortex?
It is cold. I mean, I'm up in Canada now, so I mean it's definitely
that's what I mean.
cold.
Yeah.
But not like Chicago.
Yeah, glad I'm not there. So Trace,
Right?
I really, yeah. Do you have any? It's 2019. If someone was to ask you for, how people do outlooks for the year
Oh
ahead.
no.
Okay, yeah, I know.
There, the market just started.
The outlook
Sorry
is
about that.
the outlook is definitely nerve-wracking. But do you think that we head up towards 60 bucks or so to correct this big decline?
I mean, I think it's definitely possible. Absolutely. I mean, I definitely wouldn't put, that out. Is it going to go in a straight line? I don't know. But, I definitely, can see this market retracing, up to that $60 level.
Yeah.
Absolutely.
That'd be what, about halfway back, and that was previous support. Yeah. So that would kind of be a natural. So I want to, it's been great talking to you again. I really recommend people follow you on Twitter @ShyGirl, especially if you're an energy trader, because Tracy provides great insight and content all the time. And, I watch what you tweet, and you've helped me a lot over the years, Tracy. I'm glad to call you my trading warrior sister. And
thank you, Dale.
And thanks for and really, thanks for taking some time out of the day to come and talk to us. And I hope 2019 is your best year ever in all ways, not just trading,
and you
but
too.
in all ways. All right, everyone. Go ahead.
You guys are doing a great job over there. So, I listened to your webinar. So, keep up the good work. It's good stuff.
All right. Thank you so much, Tracy @ShyGirl. That's a wrap, everybody. See everyone for the NFP tomorrow. Remember, don't just count your pips, count your blessings. Umar Tracy's account is @ShyGirl, CHI girl. And we'll see everyone. Huh? What
GRL, not girl.
Oh,
GRL.
Yeah, okay, GRL. So that's it. Thanks again, Tracy. And good hunting, everyone. See you tomorrow. And adios. Thanks for being with us today, Tracy. And appreciate you taking the time. You're one of my favorites on Twitter. Adios.
Thanks.